Hello, and welcome to this segment of the Tulane A.B. Freeman School of Business's Birkenroads Reports with continuing coverage of Hibbett Sports, Inc. Your Hibbett analysts for the fall of 2014 are Mario Ingato, Katie Turnbull, Dipanshu Sharma, and Mallory Weir. For Hibbett, we have identified a 12-month target stock price of $49 with an investment rating of market perform. Our agenda for the presentation will be as follows. First, we will provide a company overview for Hibbett Sports. We will then discuss Hibbett's industry competitors. Next, we will look into the company's financial performance and company risks. Then, we will touch on Hibbett's growth strategy. Finally, we will provide you with our valuation of Hibbett Sports and present our investment thesis. Hibbett is traded on the NASDAQ exchange under the ticker symbol HIBB. Hibbett Sports is a sporting goods retailer specializing in high-quality brand name footwear, apparel, and equipment for team sports. Hibbett is headquartered in Birmingham, Alabama, and has store locations throughout the South, Southwest, Midwest, and Mid-Atlantic states. Hibbett differentiates itself from its competitors by focusing on small to mid-sized markets with populations ranging from 25,000 to 75,000 people. Hibbett clusters its stores to increase efficiency in product distribution, and the company strategically makes store placements in shopping centers, usually near a Walmart, in order to increase foot traffic. Hibbett also focuses on staff training, which provides employees with specified product knowledge in order to aid customers in their purchasing decisions and provide enhanced customer service in comparison to its peers. Hibbett's industry competitors include Sports Authority, Foot Locker, Academy Sports, Big 5 Sporting Goods, and Dick's Sporting Goods. In comparison to its peers, Hibbett's financial ratios are at or above its competitors' metrics. Hibbett is on the higher end of the P/E ratio spectrum with a P/E ratio of 15.46. Hibbett also has a higher P/B/V ratio at 3.49 and EV to EBITDA ratio of 7.71. Hibbett's low debt levels are reflected in its debt-to-equity ratio. Finally, Hibbett has the highest return on equity of its peers at 23.31%. Hibbett's current stock price is $45.80 per share, compared to last year's price at this time of $59.83 per share. Hibbett currently has 25.27 million shares outstanding with a market cap of $1.15 billion. Hibbett's 5-year stock performance chart shows that Hibbett stock has risen from $18.83 in 2009 to $45.80 in 2014, a 143.22% increase. The chart also shows a significant decline in stock price over the course of the last calendar year, which can largely be attributed to the general investor flight from retail as well as small cap stocks. However, overall, Hibbett has exhibited a strong recovery since the 2008 recession and has exhibited a fairly stable stock price for the last 3 months, fluctuating within a $4 range. Additionally, positive economic news in the housing and retail sectors in the last quarter could mean good things for Hibbett stock going forward. As we have seen in the previous slide, Hibbett's financial performance can be affected by a variety of risks. High risks for Hibbett include economic risk and seasonality. As a retailer, Hibbett is most prone to economic risks as Hibbett's products are discretionary items, not necessities, the demand for which is largely influenced by economic factors like disposable income, consumer confidence, and overall health of the job market and the economy. Hibbett is also affected by seasonality as sales fluctuate throughout the year, usually peaking in the spring first quarter and in the back-to-school third quarter. Financial risk, which usually includes liquidity risk, leverage risk, and credit risk, are low for Hibbett as Hibbett does not hold any large debt. Hibbett's debt-to-equity ratio remains around 0.37%, which is well below Hibbett's peer average of approximately 7.96%. Hibbett's growth strategy for the future includes increasing sales via brick and mortar expansion and e-commerce expansion, efficiently placing company assets, and remaining committed to staff training and customer service. First, Hibbett will continue to expand its store presence to drive sales and plans to add 400 additional stores to its 939 existing stores in the next 5 years. Hibbett has identified expansion potential in the Northeast, West, and Northwestern United States. The map before you represents the locations of the current Hibbett stores and shows the geographic expansion potential. Second, Hibbett is committed to building a stronger e-commerce presence. Currently, Hibbett does not operate its own independent online marketplace, but plans to build its online presence in the coming year. As online sales have skyrocketed over the past 5 years, e-commerce offers great opportunities for Hibbett's sales growth. In addition to online retail sales, Hibbett is focused on increasing online and mobile interactions with its customers to keep loyal customers connected to Hibbett product introductions and increase sales per customer. Next, Hibbett plans to continue its approach to efficient asset placement. Hibbett's newly opened distribution center is conveniently located, and its increased size allows for more efficient and optimal product distribution and placement. The new facility also allows for Hibbett to hold stock of certain products on site and allows for a more seamless redistribution of products according to exhibited store demand. Hibbett's store clustering approach also reduces shipping costs, as Hibbett stores are only strategically located a maximum certain distance from another Hibbett store. Hibbett's new centrally located automated distribution facility and its store placement strategy create efficient and cost savings for Hibbett's shareholders. Finally, Hibbett continues its commitment to staff training and focus on customer service within its Hibbett stores. Hibbett employees receive specialized training to educate them on store products so that they can assist customers with specified product knowledge. Hibbett believes that their employees differentiate them from their competitors, and Hibbett invests in its employees via job training programs like Hibbett University, which is a leadership training program for management-level employees. Hibbett's commitment to employee training creates a value-added experience for customers and demonstrates their focus on in-store service. Finally, Hibbett seeks to build strong ties within the communities where its stores are located through its positive relationships with landlords and vendors as well as customers. We will now discuss our valuation of Hibbett Sports. In order to compute a valuation of Hibbett Sports, our team used 2 different methods to find a 12-month target price for Hibbett: a discounted cash flow model and the relative multiples method. For the discounted cash flow model, we forecasted the next 10 years of cash flows and then found the terminal value using a terminal growth rate of 3%. To find the present value of cash flows, we discounted the forecasted cash flows using a computed discount rate of 12%. Our discounted cash flow valuation gave us a target price of $46.87. For the relative multiples method, we took an average of 3 PE ratios of Hibbett's competitors and used that multiple for calculating a 12-month target price for Hibbett of $51.96. To come up with a final 12-month target price of $49, we took an average of the stock prices we determined using the 2 different valuation methods. In conclusion, the current Hibbett stock price is at $45.80. Our team has identified a 12-month target price of $49, which gives a return of 6.99%. We have assigned Hibbett stock an investment rating of market perform. Thank you for viewing our Birkenroad Analyst Report, continuing coverage of Hibbett Sports, Inc. The Birkenroads reports are produced solely as a part of an educational program at Tulane University's A.B. Freeman School of Business. The reports are not investment advice, and you should not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding any potential investment. We wish you luck in your future investing endeavors.